Load shedding and its crippling effects on the economy, as well as possible solutions, will likely be at the center of this year's budget. The spending pressures that government has to contend with include providing solutions to the energy crisis. It's expected government will share details on its commitment to move some of Eskom's debt onto its balance sheet. The budget speech is also expected to shed light on the support packages to assist households and businesses to cope with load shedding.
One of the big issues, of course, is the intensified load shedding that the economy is laboring under. It's going to have an impact on the fiscus. It will slow the growth of the economy. That's not good news for tax receipts in general. But also what we're observing right now is that a lot of businesses are spending a lot of money on backup diesel generation. And that's going to hurt the bottom line, the profitability of these businesses, and it's going to hurt the tax receipts that they're contributing into the state. So this, I think, is one of the key issues. We're also going to find load shedding playing in the budget on the other side, because President Ramaphosa has promised a support package for households and businesses who are grappling with load shedding.
Other spending pressures include the public servants' wage bill, which threatens to put a spanner in the works in terms of fiscal consolidation. Labour unions are threatening to embark on an indefinite strike to force government to raise last year's wage increase. The unhappiness stems as far as 2020, when government did not honour the final year of a 3-year agreement and went on to unilaterally implement a 3% wage increase last year. There is also pressure for government to continue with the social relief of distress grant amid higher unemployment and rising poverty levels.
Government seems to be committed to providing some kind of relief to consumers and small businesses if they embark upon opting for alternative energy sources. But I think more meaningfully large issues are firstly the extension of the special social grant to individuals who are unemployed and cannot access other forms of social grant, extending this for another year, which will come at a cost of another 45 billion rand or so, or about 0.7% of GDP. And the second is the issue of public sector wages. The government will not be able to go ahead again with very little of an increase in public sector remuneration. It will have to build into its plans at least some reasonable increase of the order of 5 or 6% in public service remuneration.
Troubled state-owned companies are also likely to continue being a drain on government finances.
We will see bailouts because major state-owned companies are all in trouble. Hence my feeling that more of them should simply be given away. It will save the taxpayers a lot of money. Government has proven to us that it cannot run these companies. I must also add that this announcement of President Ramaphosa in the SONA, that they want to create a super holding company for state-owned enterprises, is simply a bad idea. I mean, we have a Department of State-owned enterprises, and then we want the super holding company. It's a bad idea, and I hope it is not implemented. Another super structure over state-owned enterprises will do nothing to resolve the current problem.
It's expected that the intensified load shedding will result in SARS receiving less tax revenue in the coming fiscal year. Corporate income tax receipts will be impacted by disruptions to production and the cost of keeping the lights on. Experts, however, say SARS' campaign to strengthen compliance will help with revenue collection. No major adjustments are expected in terms of personal income tax.
Very conscious of where we are as consumers in terms of the personal income tax contributions. So there's no dramatic changes expected just in terms of those tax brackets. And with, salaries not having grown as strongly as we've seen in previous years, we won't see much of consumers moving up certain income tax brackets or finding themselves bracket creeping, which then makes them pay more tax than what they would have seen before. So we are seeing on that side stability in terms of personal income tax. On the corporate side, though, because there are pressures on GDP, we are expecting a little bit less revenue collections. Profitability of companies has been impacted.
Economists say the downside revenue pressures and the upside spending risks will lead to the budget deficit to widen to about 5.1% of GDP. It's expected that the debt to GDP ratio will hit about 72% for this financial year, slowly declining over the medium term. Debt servicing costs are expected to continue being a headache, taking away from the limited resources. Gloria Sefako Musi, SABC News, Johannesburg.